Relief from the sell-off in the previous session as the benchmark extend gains above the 25,600 mark. The street is on track to closing the week largely flat. Broader indices move in tandem with most sectors in the green. IT and real estate see some pressure.
Novartis AG will sell 70% stake in Novartis India to Waverise Investments, Circus Capital and two Infinity Partners. Waverise will lead the deal, issue instruments worth 660 crores and trigger an open offer. The company may also be rebranded.
And ABB India posted an in-line fourth quarter earnings with revenue up 6%, but the margins under pressure from higher material and labor costs. Order inflows jumped 52%. Backlog rose to more than 10,000 crores.
The government has set up a high-level committee to drive the proposal PFC-REC merger. Senior executives and Power Ministry officials will review the plan and submit recommendations as part of efforts to improve efficiency in public sector NBFCs.
Hello and welcome. You're tuned in to Buy Now, Sell Now. I'm Ankita Saxena and with me is Kavita Thaplayal. In the next 1 hour, we'll take all your stock-specific queries and get them answered by experts. And you can keep writing into us. The number is going to flash on your screens. That's the number you can send your questions to, your stock buying price, the holding period, and your question. And we'll get them answered by our top experts. And you can start sending in your questions to this WhatsApp number. But before we get going with the show and start taking your questions, let's take stock of how the market is shaping up. Well, it's a good day, I would say, because it's a recovery coming in, a respite, a breather coming in from yesterday's blowout that we saw. We have recovered at least more than 150 odd points on the Nifty from the day's lows. We are trading with gains of 0.5%. 25,580 is what we are holding on to as far as Nifty is concerned. We are at the highest point of the day currently. Nifty Bank has posted a sharper recovery of almost 460 points from the day's lows. We are actually above the 61,100 mark on Nifty Bank as well. In fact, the PSU pack is doing very well in the trading session. That's up almost 1% in trade. But the shine is in the metals. Now, remember, we have gold and silver prices also that saw an uptick after escalating geopolitical tensions, that US threat to Iran. So we do see metals also on the that are doing well, and metal is the top sectoral gainer in today's trading session. Hindalco is up in a way 2%. Jindal Steel, we have SAIL, Hind Copper that are all trading with gains of 1+%. As far as the broader markets are concerned, they are also lending support. Mid caps are trading up 0.4% and small caps also trading up 0.2%. So they are adding legs to the rally right now. But what's interesting to note is the India VIX that has shot up 7.2%. 14.43 is where India VIX sits at. So there is a lot of volatility in the market, but the market breadth looks more positive.
All right, so definitely, thank God it's Friday, and even though the market looks like ending the week flat and we are not complaining at all, but let's just get an expert advice also. We're joined by Gaurang Shah, Kunal Bothra, both our experts are live on the show. Hi, morning and welcome to the show, gentlemen. Let's take a quick market view, a fundamental as well as technical view. Gaurang, I'll start with you. Are you complaining looking at the market right now?
Thank you so much, Kavita, for having me on the show. Good morning to all the viewers of ET Now, to my good friend Kunal, to you and to Ankita, and to all your team members. A small disclosure, Kavita, before we go stock specific, that all recommendations that I'll be sharing with you on this show this morning are a part of our fundamental research team long-term recommendations. Our company, Geojit, or myself, we do not have any kind of investment interest, no financial interest, no capital gains from this advice that I'm giving, and no conflict of interest. However, we give advice to our clients on similar lines. They might have their investment interest. So I think, Kavita, this is third or the fourth time that we've seen a Nifty recover from those lows of sub 25,500. Of course, yesterday's reaction was more of geopolitical based news flow and a little bit of short build-up because we were not able to sustain at higher levels of 25,800 and 25,900, and we saw a sell-off. And today, like you rightly mentioned, thank God it's Friday and thank God there is green on the screen. So the sense is that if we are able to maintain this momentum on the upside today, of course, today is the last day of the week. It will be important to see if we are able to scale and move about 25,600. If we are able to do that, which is not far away from where we are trading, then I think again, next week we can expect a momentum towards 25,800 and 26,000. And if we give a close about 26,000, then the momentum continues. But stock-specific news-based action is definitely there. And I think that's where you should possibly concentrate on. And these are the times, Kavita, when long-term investors should take advantage of these corrections and look at fundamentally strong companies. Oil prices, which are on the boil, it's purely because of the news flow on geopolitical front side. There is no huge demand that has come in that has elevated the crude oil prices. As and when the situation de-escalates and cools off, I think you'll see crude oil prices also cooling.
Right. Okay, so all right, thank you so much, Gaurang, for talking about the markets. But we now have a phoner that's joining us, a live caller who's now joining us. Hello, who's this on the phone line? Ashok is joining us now from Chandigarh, I believe. Hi, Ashok, thank you so much for calling us. Good morning. Tell us what's your question.
Good morning to everyone. I have 700 shares of RK Swami, which I am holding since the IPO, and same is 700 for RBA, that is Burger King, at the rate of 151. It's a huge losses for me. Please suggest what should I do? Should I book the loss or hold it?
All right, Kunal, let me come to you. Since the IPO price, he's holding RK Swami. What should he do? And the second stock is RBA. What should he be doing with that right now?
See, good morning first of all to everyone, to Gaurang as well. My sense is that RK Swami is something which I don't track, so I'll probably skip that. And also, I think the history and the price liquidities are a lot more on the lower side. But for restaurants brand Asia, I think the stock chart at current levels looks like that it's trying to retest the previous major low of 2025 around the 60 mark. Currently, the stock price is at 63 levels. So I believe at current levels, the stock looks a little bit more stronger. I would not suggest to average out at current levels, but just wait for a point where the stock confirms a swing breakout. That breakout level for RBA would be about 82 levels. So you'll just have to be a little bit more patient over here. Let the stock confirm a breakout about 82 mark. If that happens, then it could confirm a breakout of this lower highs and lower low pattern, and potentially a big reversal could be at play on the cards for RBA post that. So I will suggest a hold as of now, but a buy on average further about 82 levels.
All right, so that's Kunal's view on the charts as far as restaurant brand Asia is concerned. But let me come to you also, Gaurang, for RBA. He's sitting at a loss. What should he do? Say, what's your time horizon, Ashok?
Well, Ankita, first of all, I think the prudent advice to this gentleman investor is that don't let your capital erode 50-60% and then take a decisive step, because then the question of recovery of capital itself becomes a big question mark. Forget about making profit on that investment. Unfortunately, we don't have coverage on either of these two, that is Restaurants Brand Asia or the RK Swami. I won't be able to give specific, but if you're, take appropriate steps at prudent time when your capital starts getting eroded to a certain extent. I think you should take remedial steps at that time, and by that you will protect your capital. And thereafter, if you want to make a switch or a change and shift onto something else, the chances of you recovering those losses and making small profits is much brighter. We don't have specific on these two companies, so I wouldn't be able to give buy, sell, and hold. But we like certain companies in the small cap arena, if you will. Private sector banks like IDFC First Bank reported stellar set of numbers. You can look at that particular company. This is provided the investor is wanting to make a switch. Then in the auto pack, we've seen good month-on-month numbers and quarterly numbers from Ashok Leyland. We've seen some strong numbers and a new lifetime high for NBFC companies like L&T Finance and M&M Finance. So there are plenty of strong fundamental ideas in the small cap as well as mid cap universe. You need to be careful and protect your capital.
Right, Mr. Ashok, hope that answer your query. But then let's move on and let's take this WhatsApp question. This is from Pratiksha and she's from Muscat. And she needs guidance on these two stocks. Duration is 6 months. Chambal Fertilizer 525, GNFC at 575. She's in losses in both of these counters. Kunal, what should be her exit price, and if at all you're recommending a hold or maybe an average strategy at this point in time?
See, I would recommend a hold on both of these names. Yes, fertilizer stocks have gone through a tough correction over the last 18 months or so from 2024 highs. For example, GNFC was almost at 800 and the stock has now come back towards 400, 450 mark. Chambal Fertilizers in that same time frame also I think has gone through a decent correction. It's fallen down from 750 levels to 450 where it's trading right now. But it looks like, as I was speaking earlier for many of the stocks, that many of these stocks are forming a double bottom. They are retesting their lows of 2025. That probably gives a sense that maybe we are looking at a demand zone originating for these stocks. And when you're hitting the demand zone after a 40% or a 50% correction in many cases, that generally tells you that maybe the buyers would start to look a lot bit more stronger as compared to sellers, and you might see these stocks coming back into a resurrective trend on the upside. So I'll suggest a hold as of now. Let these stocks confirm first level breakouts. For example, the breakout for Chambal Fertilizers could be about the 485 mark. Once that happens, you might see these stocks coming back towards 525 to even 575 in a matter of, I think, 2 or 3 months post that. So I would suggest a hold on both of these names.
All right. Well, with that, it's time for a quick breather. Don't go anywhere, but keep sending your questions. We'll answer them after the break. Welcome back. You're tuned to Buy Now, Sell Now, a show where we get all your stock-specific questions answered. And right now, we're joined by a live caller. Balaji is joining us from Tamil Nadu. Hi, good morning, Balaji. Tell us what's your question.
Good morning, madam. And good morning to Mr. Gaurang Shah and Mr. Gunal. And greetings for calling me to the channel.
Yes, tell us, Balaji, what's your question?
Yeah, I bought 6,000 shares of Suzlon Energy. Not 600, it is 6,000. I need to know, shall I hold for some time? I don't want to sell the stock and at loss.
Right, what's your holding period? It's long term, right?
I start buying this share from number 25, from 57 to, and averaged it to 6,000 shares. Now it is trading around 45 rupees and something.
Yes.
It will go further down. Shall I accumulate now, or it will go down to 40 rupees? I don't want to sell this stock.
Right.
Shall I hold for a long time? Is my decision is correct or wrong?
Right, but we'll get your question answered, Balaji. Understood. Let me come to you, Gaurang. His time horizon is for the long term. Suzlon Energy, now if you look at the the numbers, and Suzlon has been strengthening their balance sheet. In fact, they're well placed in the increasing demand for wind and the hybrid, and the balance sheet is still strong. But what would be your view for the long term, because he has a time horizon where he can hold the stock?
Well, first of all, thank you, Mr. Balaji, for asking the question, and good morning to you as well. So 6,000 shares, I hope, is what he said, and his average price is 51 rupees. Firstly, a disclosure, Ankita, that we have a positive coverage on Suzlon from a long-term point of view on the fundamental side. By averaging it to 6,000 quantity, his acquisition price now stands at 51. Mr. Balaji also has asked a question whether he should average. So, Mr. Balaji, first of all, hold on to what your investments are from a long-term point of view. If you want to average, I think somewhere close to about 45 or sub 45 levels, if you get an opportunity, you should average. But averaging also should be done in a systematic manner and a phased out manner. Don't average the entire quantity. Average maybe about 500 or 1,000 shares if you have that kind of investable amount at levels of 45 or sub 45, where the stock is trading right now. The positive thing about the entire clean and green energy sector, Ankita, is that the government has lined up huge capex. And remember one thing, that these data centers that are going to come up, and the AI summit which is underway, and the kind of news information that we've got, data centers would require huge power to run their data centers. And in the next 3 to 5 years, the government is planned close to about 300 to 500 gigawatts additional power capacity, which is 75% is going to be clean and green. That is via wind and solar. Yes, the balance sheet has become lean and clean. It has become a little bit more stronger. Our targets from a long-term point of view, Mr. Balaji, is somewhere close to about 70 or 75, if I recollect right. So first of all, hold on to it, and in small quantities, start averaging at current levels, and closer to 40, you can average more.
Right, Gaurang, thank you so much. And I hope your question was answered, Balaji. Well, but
Shares of Ola Electric are in focus after reports it plans to cut physical stores to 550 by March. Meanwhile, Vari Energies will invest over 8,100 crores in a lithium-ion battery giga factory in Andhra Pradesh.
shares of Tata Investment jumped over 6% on buzz that N. Chandrasekharan may get a third term. Tata Sons will meet on February 24th to review group performance and consider the proposal with backing from Tata Trust.
India has joined Paxilica, a US-led initiative on AI and supply chain security. On the sidelines of the summit, Sergio Gore hailed India's strategic move, while Ashwini Vaishnav and Sundar Pichai highlighted India's semiconductor and tech potential.
At the AI Summit, N. Chandrasekharan tells exclusively to ET Now that the Tata Group is building AI solutions across sectors with OpenAI. Sam Altman says OpenAI is committed to democratizing AI in India while preparing for job disruptions and large-scale transformation.
All right, let's shift focus to Hexagate Technology, where it introduces Replit to its Rapidix platform and launches a zero license. Let's know more about this. We are joined by Sanjay Salukya, President and Global Head Digital and Software Services, Hexagate Technologies. Hi, morning, and welcome to the show. And let's just talk about your collaboration with Replit. How does this partnership fit into Hexaware's broader AI engineering and digital transformation strategy?
So Hexaware has been long in the AI-driven software development lifecycle. In fact, we started early on with the onset of generative AI, almost 1.5, 2 years back, where we have our own platform called as RapidX. Now, essentially, RapidX is an enterprise-grade software engineering platform powered with generative AI. It is built for the enterprise. The enterprise is not very simple. It is fairly complex. You know that there is spaghetti code, there is multi-generational technology involved, there are security mandates, governance mandates, architectural shifts which might be happening, and complex workflows to deal with. RapidX was built for that, to come to capture all this intelligence of an enterprise. And so we have been working on that for a long time. Replit was known for its rapid prototyping environments. It is a very high and fairly strong tool in the rapid prototyping typing environment. We have combined these two powers of rapid prototyping with enterprise grade production. That's how the combination with Replit and Hexaware has come through. We, in fact, use our platforms, which are built for the AI generation for the enterprise, combine it with Replit's rapid prototyping environments to make it a full enterprise grade tool.
Right, Mr. Salunke, also, how does the native integration with Replit's platform differentiate Hexaware's position versus its peers?
The native integration is we have something called as Open RapidX, which actually allows you to interact with a tool like Replit. Native integration, what it does is that RapidX on its own creates something called as low fidelity user stories, which are really meant for the technical folks, meant for the technology staffs. What we do with Replit, with the native integration with Replit, is we convert these low fidelity user stories into high fidelity stories, which can be communicated with the business. So it has actually helped in closing this gap between the business and the IT teams. Typically, business gives requirements and they wait and watch, and there is a lot of kill time which happens in there. And then the IT teams iterates on the specifications. So they make a prototype, they give it out, business approves some features on it, it makes changes, and this iterative cycle takes a long, long time. What the native integration does is crunches this entire time. We call this as the intent loop or we also sometimes name it as business vibing, where you can connect with the business almost in a very short number of iterations, come to a conclusion on what the business wants and how the IT will deliver it. Both those problems are solved simultaneously. So that crunching of time is what we are calling as native integration. And native integration is making it tight and tried out with the enterprise. That means we have built prototypes with Replit now, use them into production grade environments with large enterprises we work with today.
Mr. Salukhe, what is the capability roadmap for Rapidex with rapid integration over the next 12 to 18 months in terms of additional languages, frameworks, or AI tools?
So the roadmap is, frankly, first of all, we are tightly integrated through the models which I mentioned to you earlier. We have MCP, we are exposed to RapidX as a tool through our open RapidX format, which also connects through the model context protocols. The roadmap for us is to go and keep adding to the mix on how Replit will connect with different features of RapidX. So there are 2 or 3 big motions which we feel which will be true for the coming years. A lot of enterprises are the work at a lot of enterprises is mostly brownfield maintenance. That means there is large applications which are already residing and running in enterprises. Capturing those tribal knowledge through a tool like Replit, converting that story into high fidelity user stories, and doing everyday maintenance, everyday changes, big program changes fast through software development life cycles are going to be big. Now these user stories are going to start interacting with tools which RapidX is going to bring together for agents which RapidX is deploying every day, whether it is for coding, for testing, for integrating with production release environments, DevOps, CI/CD. All of that is getting slowly integrated one step at a time. I feel that as RapidX keeps increasing the context part of an enterprise, Replit will get more and more tightly integrated with how do I convert this context into meaningful use cases which they can interact with business.
Right. Also, the AI is the talk of the town right now, and the Indian government is also doing a lot to boost the adoption of AI within the country. How do you think India stacks up versus its global peers in terms of preparedness to adopt and integrate AI into everyday enterprise functions?
So I think India has, you know, that India has traditionally been the software engineering powerhouse. And generative AI, one of the biggest, deepest, or the most profound impact generative AI has had is on the software engineering industry. You know that we already have a plethora of coding tools which can help us code very fast. What is changing for the talent in India is that we have to move away from just the minutia of coding to doing actual software engineering, building skills on why are we building this software, how are we going to engineer this. Many industries have gone through this in the past, which includes, say, a typical mechanical design. There were tons of mechanical engineers who engage a lot into drafting and drawing. That physical work is gone away now, and we are now doing true engineering. It applies the same way to the software engineering industry, which is the big pull from India. Software is going to define a lot of systems in the future, and AI is going to accelerate that definition process. And frankly, India can play a big role in that. So the areas I would say are that different domains in which AI is going to apply will need the software engineering skill to do a software defined system. It will be a combination of software engineers elevating themselves to either the domain thinking, software engineering thinking, and system thinking. All 3 areas are going to be critical for engineers to develop themselves into. And I feel that with the software defined world, which we are getting to, AI is going to be a foremost player to do this thing, and India will be able to leverage that opportunity in a big time.
All right. Also, talk to us about your zero license model and how it looks at challenging existing SaaS stacks.
It's not only challenging about existing SaaS stacks. It is how enterprises have gone covering some of these workflows using SaaS elements. There is a lot of enterprise bloat which has gotten created over a period of time. There are applications which are not suited for the SaaS tool, which have been gotten built into the SaaS environment. There's been extensive customization which has happened in the SaaS environment. What we believe now is Gen AI has done is that it's been able to actually reduce that burden very fast. You can actually capture those workflows much better. You can produce enterprise grade code out of this much faster. So really this whole bloat around SaaS licensing will be rationalized according to us. The tool cost which people have been paying, enterprises have been paying for a plethora of tools. There are enterprises which are use hundreds of tools in their environment, sometimes doing overlapping tasks. That things will start disappearing. In fact, there will be a smart thinking around what should be built and what should be bought. And there is building process has become faster, cheaper, easier, and more economical. And that is our story around zero licensing, that you can build faster, maintain faster, and maintain well, may bring about change fast without having the burden and the bloat of the past enterprise today.
Right. Mrs. Alunke, also, what are your plans when it comes to scaling beyond generative AI? Any future plans on the agentic AI front as well? And are there more collaborations on the card? Shed some light on that as well.
For now, a lot of our solutions, Gen AI is embedded into it. Frankly, I do feel that Gen AI will become the bloodstream of most services and most industries also. It is like the energy or utility or how internet became the mainstream for most industries in the past. I feel that scaling beyond scale, what I would say is it is scaling with Gen AI rather than saying beyond Gen AI. So you will have to really scale your growth in the organization of the organization along with Gen AI, and that is the direction which we go with. Building families of agents, agentic deployment of things is the way of working. There was a time 10 years back we went into building apps. There was a few decades before that where we were doing websites, we were building e-commerce sites and so on. This is the modern way of doing things. This is the next revolution where you will have agents for automating a lot of those tasks and making human effort much more productive.
Alok, thank you so much for talking to ET Now and joining us today. And talking about the stock is almost 3% down in today's trade. But then time for a short break. But before we slip into that break, let's just flash our WhatsApp number because Gaurang Shah, Kunal Bolstra, both of our experts are live with us. Just keep sending your question, name of the stock, the price at which you have bought it, and then we can get our expert view on for a strategy for you. A short break, and post that we'll continue buy now, sell now, viewer queries.
Welcome back. You tune into Buy Now Sell Now, where we're getting all your stock-specific questions answered. The number is flashing on top of your screen, so keep writing into us, and we'll get them answered by experts. So let's resume with the questions that you've been sending to us. Now, this is Rajapan, who's writing from Trichy. He says that he holds 4,000 shares of Tata Steel, bought at an average price of 110. Should he hold or should he book profits? This question is for Kunal. He has one more question. He says he wants to deploy 5 lakh rupees into the market for the next 2 years. Kindly advise a few shares where he can invest. For that, I'll come to Gaurang. But first up, Tata Steel. Kunal, what's your view?
I'll suggest a hold on Tata Steel. I think the entire metal pack is looking very strong, and we are at a point where Tata Steel is emerging to be one of the better performers from the metal pack, more consistent and less degree volatile as compared to the other metal stocks. And the breakout the stock has shown about the 175, 185 mark. I think the last 3 months, 2-3 months back. That also indicates that the stock is looking quite attractive. If I'm also not wrong, it's the 4th or the 5th consecutive quarter of price uptrend for Tata Steel. So it's been in a good shape of recovery in the last many months, and I think this trend should likely to continue for Tata Steel over the near to medium term. I'll suggest a hold.
Okay, it's a hold on Tata Steel. Let's move on and let's take Mr. Anuratchalam's question, and he wants to know about Suzlon. He has almost 6,000 shares of Suzlon at 51 now, and he wants to know a long-term view. Gaurang, is this on your radar?
Well, yes, Kavita, and we recommended earlier also, there was a question on Suzlon. So I think there's a lot of opportunity. Balance sheet has become a little bit leaner and cleaner and stronger over the period of time. Um, New capacities coming up in terms of clean and green power generation will throw off plenty of opportunities for companies like Suzlon or Vari Energy. As a matter of fact, as a disclosure, we have coverage on both of them. On Suzlon, the target approximate, if I recollect right from a long-term point of view, somewhere close to about 70 or 75. So hold on to it. And if you've gotten at higher levels, maybe 45 and sub 45, closer to 40 could be the levels where you can make fresh investments and add as well.
Thank you for that, Gaurang. But Gaurang, we missed out on Rajapan, who was writing from Trichy. The question that he asked, 5 lakh rupees he needs to deploy in the market for the next 2 years. It's a tricky one. But would you suggest some names and what are the sectors that you would be bullish on?
Sure. So I think 5 lakh rupees, don't go and add many stocks. Divide 5 lakhs into 3 equal parts. And if the 3 different sectors, no rocket science, Ankita, large cap names in 3 different sectors. First one will be a banking name from public sector bank, State Bank of India. Second one would be an auto name, Mahindra and Mahindra. And a third one would be a diversified play with defense also included, is L&T. So make 3 parts of this 5 lakh rupees and proportionately give it to all these 3 names with a longish time horizon.
Okay, so this question is specifically for you, Gaurang. This is our viewer from Maharashtra, Nitin, his name is. Coforge, 46 share at 1551, Persistent 10 shares at 5262, Dixon Technologies 4 share at 112.55. Whether to hold this or he can buy more on dips, what should be the strategy?
3 names are quite strong on the fundamental side, Kavita. Out of the 3 names, I think if I'm not mistaken, we have coverage on Coforge. I mean, it was there or it is under review, but we are positive on Coforge. Persistent Systems, Kavita, is under review, if I'm not mistaken, because the targets that we had set aside have already reached. So I think, but it's a strong mid-cap company. Dixon Technologies, as we all know, in the last maybe about 2 or 3 years, this stock has done phenomenally well. But from levels of, I think, about 2,000, 3,000 to the levels of 18,000 plus. And then currently, there was a little bit of sell-off and a concern in this sector, that is EMS, PCBs, semiconductor chips. But it's a strong play. I won't be able to give specific buy, sell and hold because currently we don't have coverage on Persistent and Dixon Technologies. But let me say this, all these 3 companies are very, very strong. Out of these 3, 2 are IT companies, Coforge and Persistent Systems. So with the kind of headwinds from the immediate short to medium term point of view, I don't think you can expect much from this IT sector or these 2 names. But long term, I think they will definitely perform because we are positive on IT overall.
Right. Kunal, what's going to be your view?
See, I think for Persistent, I would suggest a hold. In fact, I think what you're doing is you're trying to bet on the IT cycle revival, and I think over the course of the next couple of months or maybe the next 1 or 2 quarters, you might expect that the IT stocks would probably get back to a turnaround. If that happens, I think names like Persistent, they should do very well because in the previous cycle also, in fact, many cycles over the last 4 to 5 years, you've seen Persistent, Coforge being one of the the top 2 names in terms of price performance on a relative basis, amongst the mid-cap IT names. So I would be bullish on the stocks, but I think it's about trying to ride this phase of volatility, which may probably continue for these IT stocks over the short term. Dixon also, I think on the other hand, I think after this sharp 40% plus kind of a correction in the last 4-5 months, it looks like that the prices have come back towards an attractive territory. But I'll just suggest a wait on Dixon as of now because after a mild bounce back, the stock is now drifting back again on the lower side. Maybe this time around, the stock could retest the previous lows of sub 10,000 mark and break below those levels. 9,500, I think that's a good territory in case if the stock happens to come to this kind of a price point. It's a good zone where you can look to average or buy the stock.
All right, so that's the word coming in on Dixon Tech and IT space. But let's move on to the next question coming from Angad, who's writing in from Indore. He says, is this the right time to enter Indus Tower for the short term? Kunal, the right entry price for Indus Tower has already rallied quite a bit. In fact, 35% rally is what we're seeing in the last 6 months. Is this the right time to enter? Can you wait for some correction?
Yeah, I think you can look to enter the stock at current levels. It's nearing a breakout of sorts of a major, rounding bottom formation on the weekly as well as on the monthly charts. Purely on the basis of that, my expectation is that maybe I think going forward, the stock could perform very well for itself. I'll suggest a buy.
Next question is also for you, Kunal. This is coming in from our regular viewer, Ekam Baraya from Hyderabad. And he's holding 50 shares of Godrej Properties at 1786. And he wants to know if it's a hold or an exit. And Maruti also, he wants to understand. And Anantraj, 50 at 560.
See, Godrej Properties, I'm assuming if you are looking at this as a trading bet, then maybe closer to 2000, 1900 is where you can look to book profits, because it looks like that maybe that could be a point where the short-term resistance could creep in back again to Godrej Properties, and the stock could probably try and trade to this band of 1800 to 2000 kind of a mark. So it depends on your time frame. My assumption is that you're looking at this as a pure trading play. So I think in that context, I'll suggest booking profits for the stock if it comes to that territory of 2000. Which are the other two stocks you mentioned, Kavita?
Anantraj and
Okay.
Maruti.
Yeah, so I think for both of these names, Maruti I think is an exceptional chart. After that 11,000, 11,500 breakout, the stock moving towards 17, 18,000 plus mark and now connecting back towards 14,000 levels. So price wise, it's come back towards a 50% retracement. I think it's a good territory where you can look to buy Maruti. Anantraj is a slight high beta name. I would suggest that let the stock confirm a breakout of 600 levels. That's a huge zone of resistance where the stock has been unable to surpass this level of resistance breakout over the last, I think, 3-4 months of this price correction. So would suggest a buy on Anantraj. Once the stock crosses 600 mark, it closes above those levels sustainably.
All right, so that was the last stock query for the day. Kunal and Gaurang, thank you so much for both of you for joining us and answering all the stock-specific questions. And viewers, with that, it's a wrap on this edition of Buy Now Sell Now. Kavita and I will take your leave. Thank you so much for joining us and have a happy weekend.